let's get to our new segment, CNBC-TV18 Stock Capsule, a segment where we focus on a buzzing stock and talk about the company's fundamentals as well, any key triggers there. Mangalam is tracking Hindustan Foods. Mangalam, over to you.
Well, it's an interesting name because, we've seen a big outperformance in that stock, but in yesterday's trading session, it was down almost 8%. And the reason for that basically was the company's, announcement of fundraising of around 400 crores via issue of warrants to non-promoters, QIBs as well as non-promoter, non-QIBs. The reason why the stock declined in yesterday's trading session was largely because the warrant price, conversion price, was much lower than its previous close. So warrants worth nearly 310 crore to non-promoter QIBs were convertible at 546 rupees per share, and worth 90 crores to non-promoters, non-qualified institutional buyers was convertible at 563.4. The previous close price of the stock was a little above 571 itself. But, that should not make people not take notice of the big move that we've seen in the stock price. 3 times in the last 3 years and 9 times in the last 5 years. What is the core business of Hindustan Foods? Their core business is to buy non-core manufacturing businesses of large players. In fact, they've bought some non-core businesses of a lot of these FMCG players, and they turn suppliers to them. They manufacture for HUL, the personal care business, F&B. They manufacture for Nykaa, Wheat, FedEx, as well as Hush Puppies and Bata. In FY17, they acquired the leather division from Hindustan Unilever. In FY19, they started manufacturing detergent, tea and coffee. Then they also acquired malted beverage productions alongside home care production. And in last year itself, they started manufacturing sports shoes, ice creams, and acquired a plant from Reckitt as well. Has that seen an improvement in their numbers? Yes. In the last 5 years, their revenues have nearly moved 5 times, from 500 crores in FY19 to around 2,600 crores in FY23, with their margins staying around 6 to 7% itself. Importantly, this is a manufacturing company, so the metric to look at is their gross block. Their asset turnover ratio is close to around 4 times, so that's a positive as well. They do have debt of 500 crores on their books. With this fundraise, perhaps that should be, alleviated. Those concerns should be alleviated. The big triggers to watch out for, them expanding into new products, focusing on scaling exports, backward integration, as well as higher margins business, which is their own personal brand business, as well as anchor tenants. They have interesting shareholders as well in the likes of Westbridge Capital and Nikhil Vora's fund, as long as his, personal investments too. And the stock trades at 63 times FY24 price to earnings.
All right, thanks a lot for that. So that's on Hindustan Foods.